Welcome to the Brokers Open Podcast.
This week on Brokers Open Podcast, we talked about iBuyers. Are they game changers or just a moral maze? We discuss getting to the bottom of what they do to the market. We talk about changes in the market that'll impact them. Tune into this week's Brokers Open Podcast.
Hey guys, this episode is brought to you by our friends at Palm Media. Palm Media is a boutique digital marketing company built for realtors by realtors. They help agents and teams dominate a target market with specific, tailored strategies. Everything from video, chatbots, landing pages, Facebook ads, database management, and coaching. And oh my gosh, it is way more affordable and simple than you could ever imagine. Call now for 100% free strategy session, whether you have a budget or not. Dr. Ben, my good friend, will make sure that you are heading in the right direction, building your presence online, or flat out crushing your competition. Before you spend a dime on marketing, door knocking, or sending out postcards, call Palm Media, 813-765-7706, 813-765-7706, or click the link in the description below. Manifest your paradise.
So, what's up? Podcast Friday, baby.
I know, I'm excited. This is good.
Yeah, we got to get another good one today.
Other than it being hot right now, I mean, it is extremely hot for those of you that aren't in Florida. But, well, even if you're not in Florida, you're still feeling the heat.
Right.
But I love this time of year because we have all of the really patriotic holidays and
Absolutely.
You know, I just kind of really enjoy this type of year.
As long as there's AC.
Yeah.
Because you will frickin' melt otherwise.
I tell you, it's still been a little bit hot in my house, even though I try to crank it down. My house is...
So we've got so I saw, something popped up, this day in history. I know you do some stuff on Instagram with all that, keeping people focused on what's going on with their life. One of the things that popped up was 1950. The last time it was this hot, this early in the year, was 1950.
That's crazy.
Absolutely incredible. So hopefully we'll get through it.
We're praying for rain. We're supposed to get rain this afternoon, which is great.
Yeah, it'll cool everything off.
We got the
water and all that.
U.S. Women's World Cup match tonight.
You gonna watch that one?
Hell yeah! Against France.
That's right. That should be a very good game. Like we just talked about. They struggled with Sweden a little bit. Mm-hmm. So hopefully they've got their head on straight and they can do it. The women always perform really well. If only the men can perform that well.
Well, I mean, at least they advanced in the Gold Cup. They just beat Panama. Right. That was a pretty nice little goal by Josie.
Oh yeah, yeah, he's something else.
Yeah, he's like a thoroughbred, man. Mm-hmm. That guy is just a truck.
His end of the field. Man, you just have a hard time stopping him.
Yeah,
he's just a boss. But there's some young talent too that's doing really well.
I'm a big Pulisic fan.
Oh yeah,
he's great.
Oh, he just did the nasty on somebody on that. Did you see that? Ran and kind of half a Maradona, and the guy was pressing, and he stops the ball on the line, megs him and runs around the guy. The guy gets embarrassed and is trying to grab him and claw him and everything, and he just plays through it, man.
Yeah,
at 19 years old, right?
That's pretty awesome.
Freaking beast. Straight up beast.
I was not that way at 19 years old.
No. Focus like that? No.
At 31, I don't know. I'm there now.
Okay.
Yeah.
They've got tryouts coming up,
Yeah. I'll be drinking a beer in the stands.
That's right. Guaranteed. So what are we going to talk about today? I think we got a great topic, right?
Yeah. I think that it's on the mind of a lot of consumers, on the mind of a lot of realtors, and it's in a lot of media outlets. So,
right.
iBuyers.
Absolutely. There's such a changing customer demographic.
Right.
Everything that you hear. Take real estate out of it for just a second. Everything that you hear is the demographic of how people purchase, what people are purchasing, and how those people purchase has changed so much. The customer demographic is a lot different than what it used to be.
Right.
It's not just about the consumer that wants something. There's a lot of people buying on behalf of other people. There's people buying in bulk, which is kind of what the iBuyer is. There's people that are purchasing and drop shipping and selling, and you can go to their website and they're acting like they're buying and they're pawning it off to somebody else. There's ebooks for sale everywhere. I mean, there's just what happens with the consumer is just so much different than what it used to be. So of course it's a natural progression that this is going to try to disrupt the traditional purchase and what goes on. So I think we're going to talk out of both sides of our mouth on this, right?
Yeah, I think it'd be good for us to play devil's advocate. So when you're listening to what we're saying, don't take what we're saying as necessarily the opinion that we follow. What we're trying to do is we're just trying to educate the consumer and at the same time kind of play a little bit of devil's advocate in what we're talking about.
Just vet it out.
Yeah.
I mean, ask some questions and put it out there so that people have a little bit better idea of what's going on. So
Yeah.
let's start with, what is an iBuyer? Right?
What is an iBuyer?
Yeah.
Right.
So iBuyer is basically internet buyer is what it means.
Yep.
And so there's an algorithm. Somebody's plugging things into a computer, whether it's coming directly from the MLS or whether somebody's out there searching. They're pulling certain information, running it through an algorithm to determine whether a bulk purchaser wants to make an offer to see if they can purchase that house or not.
Right. Right.
Okay. So there's a lot of different companies doing this. Okay. So there's Zillow does some of it. There's a national real estate brand that says that they're getting into it. Redfin's doing it, right? So they've got OfferPad is doing it. There's a bunch of different ones. What's the other one?
Open Door.
Yeah.
Zillow, whatever they call it.
Yeah.
Yeah.
Z-Buy or whatever it is.
Yeah.
So what they basically do is they take the information about the house and they put the offer out there. And so here's what I think is an important part of this. And let me kind of liken this to something. I'm from Georgia, right? So everything's got a damn story. So Alan, who works out of my office, right? So Alan sold north of 6,000 properties in his real estate career. The bulk of them are REO properties.
Right.
Okay, so I talk to Alan all the time on stuff like this. When our REO division gets bogged down on something, they reach out to Alan. The cat knows what he's doing, right? He is what I would consider to be an expert in REOs.
100%.
So whenever I talk to him about it, he'll even say, after all of that experience and after a lot of people acknowledging that he's an expert, including the asset managers that hand stuff off and everything, he'll say all the time, the REO business is constantly changing. There's always new things happening. There's always things shifting, all of that. So the thing that gets me about the iBuyers is, I'm already seeing, ads and things on Facebook and everything, people claiming to be an expert at dealing with iBuyers.
Right.
I know they haven't sold 6,000 properties.
Right.
And so sure as hell, they can't be an expert on it at this point.
No.
So I think people that are taking a look at this need to really understand that it's in its infancy. There's a lot of it going on.
Yeah.
But it's in its infancy of where it will end up. Don't you agree with that?
Well, even the most successful companies that are doing the iBuying would never even consider themselves an expert at what they're doing right now
It'd be
because it's
dangerous to
kind
say
of
it.
a new frontier.
Yeah.
So for somebody to go out and say that they're the expert right now,
Oh, yeah.
they're just full of it.
Yeah, so I was searching some information online, and everybody probably knows what an advertorial is, right? So it's basically an advertisement that looks like an editorial in a certain page. And this was a pretty reliable real estate news source. And so I'm reading through it, trying to get my head on straight about it and everything. And I read through it, and it seems like it's all pretty slanted. And then down at the bottom of the article, and it basically says, one of the leading experts on iBuyers, if you're not sure what to do and you want somebody to review your offer, help you get to the bottom of this, click on the video below. And then there's this guy standing there pointing at this whiteboard, talking about being the expert on the iBuyer. The whole thing, if I didn't know what an advertorial was,
Yeah.
I would have thought that article was written on behalf of this guy to kind of point out that he was an expert on it. Reading through it and everything, I realized that everything in the article is slanted. It's an
Yeah.
advertisement for the guy.
Right.
For him to be the expert to get the business. So my point is, when we're getting the information out there, we need to make sure that we're really getting it from
Yeah.
experts.
Yeah.
We need to make sure we're really getting it from the people we're supposed to be getting it from. We need to make sure that we're really taking a close look at what information you're getting and has it been vetted.
And that's really important in all aspects of your life because we saw
Oh, yeah.
that going to get political, but we saw that a lot in the politics and fake ads being ran and stuff like that. So, checking your source is really important because a lot of people just quickly go to Wikipedia and don't understand, what Wikipedia really is.
I go into Wikipedia all the time and just make stuff up. Submit it. Right. Hey, it's their job to figure out whether it's right or not.
Right.
Just kidding.
But vetting your
But I could.
sources is really important because if our consumer is going to be more knowledgeable than ever, it's really, really important that we do the right homework and actually vet everything.
Completely agree.
Yeah.
Completely agree.
Yeah.
So in the marketplace, what they're doing is they're putting offers out there. Okay. So one of the things that I also found going through the articles is a couple of the articles made the same statement, which I know to be false because we've dealt with some of this. It says the purchaser will buy in a matter of days. Now that's not the truth. Okay, so they would have a very hard time buying in a matter of days just because of just because of the title portion of it.
Right.
So they are a cash purchaser, and if they can get the property at the right price, they'll get through the inspection really quickly. But it said purchase it in a matter of days. So how many days is that? Is that 30? Is it 45? Is it whatever? So if you're really looking, if you've got yourself in a pinch and you're trying to hurry up and find somebody and they tell you it's a matter of days, you need to be really careful about that, because if they're going to act that expeditiously,
Right.
they're probably going to want a big cut in
Sure.
what the market value would have been.
Sure. I mean, this is pretty big too. I mean, there are pockets of certain markets that these iBuyers are really quite taking over.
Yep.
And an interesting take on it is these neighborhoods are starting to transition a little bit.
Mm-hmm.
And you're either starting to see people go with the flow or push back too. So it's like, you know, again, playing devil's advocate, you got the iBuyer coming in who's going to pay all cash for it, either renovate it, bring it up to whatever, and then sell it, or rent it out. What you're doing is you're completely changing neighborhoods.
Absolutely.
And some people aren't okay with that. And the rebuttal to that is, well, if you're not going to sell your house to the iBuyer, I bet your neighbor across the street will,
Right.
or somebody down the way. So, I mean, it's almost like you go through this moral maze, but at the same time, I mean, in certain areas, it is very much a locomotive.
Absolutely,
Yeah.
completely agree. And so again, talking out of both sides of our mouth, some areas it's probably going to be really good if there's an opportunity for a margin and being able to build it up and everything. That might be a good thing to revitalize
Right.
a certain area to bring new people in and properties, you know, turned and flipped, because we've seen neighborhoods where people have come in and they start to like it and they can buy at a good price and they start to, you know, upgrade the properties and selling them, you know, for more money and everything. And the next thing you know, that's the cool, hip, trendy place to be.
Yeah.
Right. So they might be doing some of that same thing. But the flip side of it is a normalized market is only going to absorb what the demand says to absorb.
Right.
My opinion, this is fake demand.
Yeah.
So we have to be careful with that. Okay.
Yeah.
What are they going to do with the inventory whenever it gets to a certain point, absorption wise?
Yeah.
Okay. So now you've got one entity in charge of a large portion of inventory. We got to be careful with that.
Yeah, sure.
And it's not for you and I to say, and it's not for the seller to make a decision of what's not best for them. I think we just have to keep an eye on that,
Yeah.
because now if that shifts, you could have 3 or 4 or 5 of these hedge funds who are pulling money together. For the most part, that's who it is.
Yeah.
Pulling money together. They might get to a certain point where they don't have any purchasing power, and now they need to liquidate some of that. And they're going to start dumping those properties.
Yeah.
So
It's interesting that you brought up the artificial, artificial demand.
Yeah.
Is because those numbers can get skewed really quick. The problem with, even in your daily real estate, career, looking on the MLS and looking at statistics and stuff like that, it's one thing to look at numbers, and I think that numbers tell the truth. But if you dive deeper than the numbers and start to understand the processes behind things, and like you said, the artificial demand, your numbers are going to be skewed because of that. But
Oh, yeah.
it is pretty freaky to think about that. So the way that these iBuyers make money is obviously with their margins. So they buy at X price, put Y into property,
Right.
sell for Z.
Right.
But at the same time, they can hold that property as well with putting it into the rental market and then letting inflation take their
Right. As
take
long
their
as the
property
property doesn't
value
get
up.
trashed along the way.
Right. But what happens when the market starts to slow down, or those margins go away? Then for them to make their money back, all of a sudden they are unloading, let's say 15-20% of their inventory, and
Right.
then you can saturate a market and you can drag a market down because of that. That's pretty freaky.
So to think that they're going to have it figured out of timing the market, what they're actually doing is they're determining the timing of the market. And it's risky to have any one entity doing that.
No.
Now, that's macro, right? So let's talk about micro for just a second.
Yeah.
A seller can be in a pinch. They don't have time for a traditional sale. You
Right.
know, instead of worrying about the neighborhood and all that kind of stuff, I've got a job. I've tried a traditional sale. The traditional sale didn't work for whatever reason.
Yeah.
Maybe they're tight on their margin of where they can be and everything, or there's 7 other houses just like theirs for sale. So now they can get connected with a potential buyer that might be interested in purchasing that property and allow them to move forward equity wise.
Yeah. Yeah.
So there's actually a company in Atlanta, and they've got a trade-up program, is what they call it. And so, they come in and they'll purchase and I'm sure there'll be another market soon if it's viable in Atlanta.
Right.
But, they purchase your house and they allow you to move on to the next house. And, they help you with the mortgage and all the different steps of it. So they've got a little piece of the pie all the way through. And then they sell that primary residence.
Right.
Here's the thing that everybody has to keep in mind, whether it's macro or micro. You cannot lose money on every deal and make it up in volume.
Right.
So they have to make money somewhere along the way.
Right.
And so what most people think is that they're just taking the real estate agent out of the mix, and because they're taking the real estate agent out of the mix, that's the money that everybody's going to get spread around to everybody.
Yeah.
And that's not it. There's fees. There's really some fees associated with it. They need to pay close attention to it, because if you've got market value and you're getting 11 to 15, 18% in fees that are coming out of it, or a reduction in the overall price instead of being on a competitive market, that's dangerous.
Right.
It's dangerous for the seller, but the convenience might be worth it for some sellers.
Right.
I just don't know that they are for all sellers.
Yeah, no, I think that's an interesting point too, because a lot of people just assume that if you're an iBuyer, the convenience of the iBuyer situation limits itself to less fees, and you avoid commissions and some of that. But on some of the brands that I research, oftentimes these fees are actually more than what a real estate agent would charge, and it really just brings back into play what the value proposition is, and in the end truly understanding the customer and what their goal is, because it's easy to assume a seller wants some whatever it is, right, to be the goal, but that's not necessarily the truth every time.
So the agent should listen. How many times have we heard that, right?
Yeah.
So they're paying for the convenience. How much are they paying for the convenience is what they really need to research. And not all iBuyer offers are the same.
Right.
And not all fee structures are the same.
Right.
So there is somebody that's purchasing the house, and there's somebody that's managing the purchase of the house in an iBuyer situation. It's not like those two things don't still exist.
Right.
Those two things exist. It runs through an algorithm, and somebody decides, hey, yeah, we're going to give that a shot, or we're not going to give that a shot. So one of the other things that we run into with programs similar to this is there's a price negotiated, and then inspections are done. And once inspections are done, the price gets kind of renegotiated. Right?
Yeah.
So that, depending on the condition of the house, that's going to make a lot of difference. If you're looking for a convenient sale, if you want market value, then your home has to be in market value condition.
Right.
So you can't hide something and not disclose it and purchase, have an iBuyer come in and purchase it, because even if it's an iBuyer and you didn't disclose it, guess what?
Right.
You still have a problem. It's not a real estate agent thing that you have to do disclosures.
Right.
That is state and federal, depending on the disclosure. So you can't get away with not doing that. So, I mean, not that anybody out there would do that, but if a seller didn't want to disclose something, hey, maybe I can go to an iBuyer, get a quick offer, and before they realize what's happened, I've moved on. Well, if you've moved on and they find out about it and they find out you knew, you're still in trouble.
Right.
You have to disclose, right? So there's that piece of it that I think it's a very, very small margin, but I think it's worth saying out loud that you can't hide from disclosure.
Yeah, that's a good point. I mean, it's not like you're gonna avoid the big bad inspections and all that good stuff. So
right.
That's funny.
So there's a lot of different so there's 8 or 10 major iBuyers, would you say, at this point?
Yeah, I would say so. I mean, obviously some of the brand names are a little bit bigger to other people than
right.
others, but yeah, it's interesting to see too. So these iBuyers and these hedge funds, all these people are getting a lot of capital, and the capital's building quite a bit. Mm-hmm. So obviously, there has been some, demand pull from some strings being pulled, and you always wonder when you have scenarios like this or companies that come out exactly in what their end game really is. Yeah. Because that's a scary thought. Like if we really talk about iBuyers being a legitimate thing, that they hold a really small percent of some markets. I mean, I'm looking at some of these markets, and yeah, they'll have 4 to 6% of a market, which is small right now. But
right.
if that were to grow, can you stop that locomotive? And we've run into this issue before with bad mortgages. Back when everything fell out, we've seen this before with the CDOs and CDSs and how unregulated the finance industry was. Right. this almost feels
Yeah, it's got
like the wild, wild west, where it's there is that unregulated aspect to it. But then who's to say that it should be regulated?
Right.
You know, Mr. and Mrs. Homeowner can sell their home to whomever they want.
That's exactly right. So welcome to America, being able to do that. That's absolutely fabulous that they can, and somebody might be exploiting the niche, basically. Right. So, so we talked about this yesterday for just a minute, and one of the things that we talked about, is when everybody's getting in, it's time to get out. When everybody's getting out, it's time to get in, right? So, there were some companies, 5, 7, 8 years ago that came in and bought a whole bunch of properties when the market was really low value-wise.
Right.
So it was absolutely, the buyers could come in and get things at a really good price. There was a lot of foreclosures, a lot of short sales and everything.
Yeah.
The thing that worries me about this is that, at that time there was a bunch of people that studied the market and purchased. The old saying is you make money when you buy real estate and you realize it when you sell it.
Right.
So my concern is that traditionally, and this might be where I'm wrong, traditionally you buy it at a good price. You either hold it or you bought it at a good enough price where there's equity and you can turn around and sell it and realize you're okay.
Right.
That's not where we are right now. Prices are at a high.
Yeah.
So how do you make money when prices are at a high unless, one, you're purchasing below the market, or two, you're buying in such bulk, which this might be what I'm having a hard time wrapping my head around because it's not traditional at all. You're buying in such bulk, which you mentioned this.
Yeah.
So thanks to your finance background and understanding all this. I appreciate you doing that for me. So you don't have to make money on every one of the houses if you're buying 30,000 houses.
Yeah.
Right?
Yeah.
You make money. You make decent money on 10,000 of them. You break even on 5,000 of them, and you lose on whatever the difference of that is. See, that's how bad I am with finance.
Yeah.
So you lose a little money on the difference of those, but depending on how you made that money, your margins in the big picture could actually and you can control the portion of the market.
Right.
So not only are you getting to make a decent margin on the ones that you do buy that way, but you're also being able to control the demand in the market because you own enough of it.
And I think that's the bigger picture is that, they're going to take some of the losses in some of the properties and they're going to break even in some of them. But let's even just say, that they're running at a break even for a couple months or whatever it might be. The idea is, like, when I go back to business school, and the premise was, if you can take on a new job as an entrepreneur, take on whatever it is by selling that widget and still break even, do you or do you not take on that job? And the answer is always a resounding yes, because business breeds more business.
Economy of scale.
Correct. Right. Exactly right. And that's where we're headed with this, is that, I think that these companies are making a bet, but at the same time, I think it's a very calculated bet, even if it's a break even, scenario, because this allows them to move forward and to control markets and to be able to push things the way that they want to push them. And in the end, I like that long-term play in terms of just on the financing part of it.
Right.
It's a smart deal because what you're doing is you're starting to control markets, and
and inventory level and pricing and all that kind of stuff.
Right.
So the legislation could come in at that point, though, and that could be an issue. Legislation is always right. So that's a factor. So, if I'm hearing what you're saying right, and I mean, again, we talked about this a little bit. So, if as long as what they're really trying to do is control the market and make a smaller margin on a larger piece of the pie.
Right.
Then this is absolutely probably a long-term game changer, and we haven't seen anything. We're in the infancy of this, and this won't go away.
Right.
The flip side of it is, if this is just a quick play on making some money, and the managers making the bulk of the money, and the people that invested making a little bit of money,
right,
then we're probably running in. We're gonna head towards a bad place.
Right.
When that inventory has to be liquidated and it can't be absorbed. So I hope, what we've talked about. I hope that this is real, that it's truly about the first of those two in respective order. I hope that it really is about them controlling the inventory and purchasing, and that there's a sound business plan and a little bit of money on a large margin. Because if not, we're gonna, this could cause a whole different kind of housing issue. Yeah,
and it's, but it's like you look back at history and you look at what happens in finance and what happens whenever things come crashing down. People are looking out for each other until the buck stops.
Right.
Right. And that is the part that definitely, I wouldn't say scares me, but it's something that I think that regulation's going to be looked into.
Oh yeah.
But
The market's going to correct. The market is always going to correct. In the type of market that we have,
yeah,
the market's always going to correct.
right.
When it corrects, and how big of a correction is what we
The
have to
unknown
make sure we're
factors.
paying. Yeah. That's the part that if we had a crystal ball, right?
It definitely, I mean, there is that. I always go back to that Moral Mazes, which is a great book. If you haven't read it, Moral Mazes, I read that, probably 10 years ago now. But, I go back to a lot of the chapters that I read in that, and it's just a resounding thing now. It's, it becomes more and more prevalent. The idea behind Moral Mazes is that, it's really easy to look at decisions on a quote unquote good and bad, or, you got the devil and the angel on your shoulder. But once you start to get into and dive into business and how markets work and things like that, sometimes those lines have an easy way of getting blurred.
Oh yeah.
And I'm not saying that what you and I do would ever be unethical, because I always like to run that. We like to run that straight and narrow.
Right.
But things start to get a little bit cloudy.
Right.
When you bring up innovation, when you bring up change, when you bring up growth, because what somebody might think is the right decision, the other person's saying, well, this is the market.
Right. What started out as pure gets diluted by factors that were undeterminable at the beginning.
And that is the uncontrollable part. So
Right.
we can have all these iBuyers who have all these great intentions, but what worries me a little bit down the road is, if something happens, they have their thumb right there on the
Right.
pulse.
And I've got all this inventory, and because it's a hedge fund, right? I've got all this inventory, and now all of a sudden, all the people in the hedge fund are like, "Yeah, it's time for us to do something with this." Wait a minute.
Right.
The market doesn't say it's time for it. I don't care. I want my money, or I want the what. So now all of a sudden, they have to start dumping properties into the market. They have to start doing different things, and morally, that's not where they started. To your point,
Yeah, right.
And morally, that's not what they wanted. But all of a sudden, now they're devastating a market. Because one of the things to point out is, depending on the market that you're in, there might be several different types of iBuyers in that market.
Right.
Like Tampa has 2 or 3 of them, right?
Right.
But Atlanta's got 8.
Right.
Whenever the graphics that I looked at, Houston had 4 of them.
Right.
Los Angeles had 6 or 7 of them. There was so depending on the market that you're in, there might be a different amount of those buyers. Now that means if it's a good market, like Tampa's a very solid, stable market, right?
Right.
Tampa isn't like this,
Right.
price wise, right? It's kind of like that,
Right.
And so now that person comes into it in a relatively stable market, all of a sudden it goes bam.
Yeah.
So they could have a big impact on a market, and it's in the hands of just a couple of buyers,
And that's right.
versus 7 or 8 like Los Angeles, or 3 or 4 like Houston.
What's crazy about that is, so if you look on the back end of this, so you have investors, you have individual shareholders, you have a board. All of those people invest in these iBuyer companies for one thing, a return.
That's exactly right.
So either the returns come in or they don't. And once those returns either stop coming in or the returns slow down, the dynamic changes drastically. And that's what people have to understand very quickly, is that this isn't a UNICEF organization. And I'm all for free market.
Right.
I'm all for being an entrepreneur. I'm just, like I said, we're trying to play devil's advocate here. But, you don't realize the beast that you're growing.
That's right.
By pushing these returns and trying to push the envelope so much. I'm all about pushing the envelope, but you start to get on a little bit of a slippery slope.
Right. And the other thing is people buying into the hedge fund are supposed to be a more sophisticated purchaser, right?
Mm-hmm.
They can't just be any Joe Schmo for the most part.
Right.
And so they have to be a more sophisticated purchaser. So you hope that they're taking a serious look at what they're doing. So what does that mean? If it's supposed to be a more sophisticated person, then they must be getting promised a certain return on this.
Right.
Where is that return coming from?
Right.
And so if a house appreciates at 7% per year, 8% per year, let's say it's a great market, 10% per year, am I going to invest $3 million hoping that I can get a 7 or 8 or 10% return every year
Right.
on something that is as fluid as real estate?
Yeah.
Right. So now all of a sudden, what are they being promised? What are their returns that they're going to put that kind of money into something as speculative as this? So maybe, hopefully, they're saying over the long term you're going to get 5, 6, or 7%, but we think that it's going to be 5, 6, or 7% for the next 15 or 20 years.
Right.
Now all of a sudden I'll throw my money into that. But if I'm thinking it's a quick turnaround, and all of a sudden a lot of people are thinking that, you get into a bad situation really quickly.
Yeah. There's also a trickle-down effect with all of this, because understand that all of these iBuyers are cash buyers.
Right.
And so I see a trickle-down effect in a major way. And it, like we said, 4% in certain markets, if that number grows to 10%, let's say, okay, mortgage institutions, lending institutions are going to be in real trouble.
Yep.
Okay. And then let's go into title companies. There's a lot of title companies out there, whether they're in your offices or they're the title company that you want to use. If an iBuyer controls a market, they're going to control a certain title company to close that, because there's margin to be made there. Title companies are going to go out of business.
Yep. So that's a great point. So there's a dollar rolls around in a community, right? Is what they from an economic standpoint, they talk about how many times it rolls around. So when somebody goes to a restaurant, it rolls in the community a certain time and everything. A dollar in a real estate transaction rolls 56 times.
Right.
Was the last estimate I heard. Now that was about 2010 that I heard that. Okay, so that might be a little bit different. I can't help but I don't think that it would be substantially different. What you're talking about, that dollar is going to stop rolling around in that community that many times.
Yeah.
So that means that
and guess what? These hedge funds or these iBuyers are not local community people. This is not your neighbor.
Right.
This is not your neighbor.
They're not buying insurance from the local person. They're not buying title services from the local person. They're not. So all of that, and again, morally, do you have to support that? No. So some people, I got friends that would never go to Bonefish. I love Bonefish, right? Bang Bang Shrimp or Kick Ass,
Yeah.
right? So but would never go to Bonefish because they want to support the local, right?
Sure.
So that's
and I get it.
That's part of the factor, absolutely. The other part of it is that dollar that whenever I spend at Bonefish, at least it's localized.
Yeah, sure.
There's so much of this that won't be localized.
Yeah.
So what's going to happen with that dollar on some of those things? It's not going to roll around in the community like it did before.
And I didn't think about it too. I mean, it's even more of a trickle-down effect with contractors and everything like that. So these iBuyers obviously have their own contractors, have their own subcontractors.
Home inspectors, yeah.
They have it all. So what happens to every other contract out there? Every other, what happens to local hardware stores?
Right.
What happens to Lowe's and Home Depots in your neighborhood? What happens to roofers? What happens to plumbers?
And so now the plumber might be able to bid for that contract and everything that's happening in Tampa, right?
Yeah.
But he's not going to get paid the same that he would if it was just a regular homeowner. So
Market's going to change.
right. So all of that is going to factor into this as a whole. And so with all that being said, whenever we talk about iBuyers, internet buyers, all that kind of stuff, it's not just about who is the purchaser. It's about the impacts of the purchaser and what impacts that has on all the other pieces of this. Because like it or not, your local real estate person is spending their money in that community.
Correct.
They should have relationships with the people in that community. They should be sponsoring, soccer teams, right? They should be, all the other things that they should be doing. I just don't know that that's going to happen with the iBuyer. One, because they need to make those margins.
Right.
How come they're going to put the pressure on that plumber? Because they have a responsibility to make the margin for the investor.
That's right.
Instead of supporting that local plumber.
Correct.
Because they might do business with them later and because they see them at the soccer field and all that kind of stuff. So all of these things factor in. But again, let's go back to micro market instead of macro. If I'm the seller and I got to move next week, shit, man.
Yeah.
I might want that offer. I
Pretty
don't care,
glaring.
I don't care about the plumber.
Yeah.
I don't care about somebody's kid's soccer team. I'm going to be in Waco, Texas. I'm going to worry about soccer team there.
If you're willing to sacrifice, let's say 5 or 10% off of your off of what the market value might be. I mean, that might be a convenience factor to you. That might be, I don't have to go through showings. Right. I don't have to go through the ambiguity of some of that. So, man, it really comes full circle. I really, really encourage every consumer, every realtor, to really make a conscious effort at really researching and thinking about like what Matt and I are doing, because it's so important. It's so easy for real estate companies and realtors to just push it off and ignore it or push it off and say it's bad, and it's the same way for consumers, whether you look at it as bad or good. I want you to play devil's advocate in your own mind because it's going to make us all better.
Absolutely. And it'll put it. I think it's a great convenience for the people that need it.
Yeah.
I honestly do.
Yeah.
And I think that agents should understand it.
Yeah.
Not at a cursory, but they should actually dig in and understand it exactly like you just suggested. They need to know what's going on with it so that they can help the seller make an informed decision, because, we talk about it all the time. Sit down and listen to the seller. If this is what they need, absolutely that's what they should do. If it's the right thing for them, absolutely it's what they should do.
Couldn't agree more.
So as time passes, though, I think the ideal situation would be as if the absorption capped out at a certain amount. So maybe that number is 10 or 12, 15%. That's not that big of a deal. The market's not going to fall apart, right? At 3%, there's not enough, for the iBuyer to stay, okay, so that maybe that's not. So maybe this is just a new normal, a new traditional. 10 years from now, are we going to say, oh, yeah, everybody was worried about iBuyers, but, they only do 8% or 9% of the market. Well, some people are shitting a brick because they're doing 3% of the market right now, right?
Right.
Is that going to be where it is? We don't know.
No,
right?
I don't know.
But there's certainly a place for it because it's working.
Right.
So we can't ignore it and act like it's not happening.
So the one thing that we haven't pointed out is that currently iBuyers are attacking a certain price range, and it typically is, I don't want to say lower end. It's just a more classic,
bread and butter type of
bread and butter type of deal. So you have the block home that's at least a 2.2 whatever. Right. But they're really staying in that $100,000 to $250,000 range. But what's interesting is that you have markets inside of markets, and this is something that you and I talk about a lot. So you can have luxury at a standstill, and then all of a sudden you have that middle gap growing for different reasons, and it all has to do with the economy and the way the job growth is and all that. But maybe there's some sort of play in there for the iBuyer to start selling off some of that lower end inventory in order to absorb a new portion of a market in a different price point. So,
and I'm sure that they're smarter than us, right? So I'm sure that they've thought about that. Maybe they're buying in the bread and butter, and then they're going to sell that to try to move into a different portion of the market, depending on which part of the market is not performing. So we talked about the buyers and sellers side of the market, right? If they keep going in and purchasing on the buyer's side of the market, and it being at different segments of that market, then the next thing you know, they're kind of setting the pace and the trend again for what's going on with the market. So if luxury's slow, that means the buyer's getting a better price on it, right? They go in and buy those, and then 2 years from now, when the luxury end starts picking up, they start liquidating those, and they start moving through those different segments and just kind of stay ahead of the game. Rock on. Yeah, that's going to keep the market moving. Right. I like it.
Right. And there might be a little bit of, because people are either upgrading or downgrading when they're buying a house, and it'd be interesting to see the scope 10 years out, and they may have a pulse on that too, and the understanding that let's say the middle class owns a $300,000 house, but if something were to slow down or the job market pauses for a little while, they might be selling that $300,000 house and buying a $180,000 house in order to get back in that comfortability zone. And guess who's going to be selling them that house?
Right. Or their kids could be getting out of college. Kids I like calling them money-sucking Wi-Fi pirates. I meant to say kids, is what I meant to say. Right.
Bless you.
Was that outside? Was that outside or inside my head?
No, I think it was inside. All
right. So, but their lifestyle changes, right? And as their lifestyle changes, they might want to be, on the water, whatever the situation is.
Right.
If the iBuyer has the analytics behind that, rock on, man.
Watch out.
They're gonna stay ahead of what's going on with the market. Good for them.
Yeah.
And it helps certain sellers out in certain situations. I think the biggest thing is, do they take a bigger bite than what they can truly handle?
Right.
And if they take a bigger bite than what they can truly handle, then they're going to control the market based on their needs instead of the market needs. Right. And I think that's where we'll run into a problem.
Right.
So.
All right. Well, I enjoy this, and
as always, yep, good stuff.
I would really like obviously when this gets posted, I want to hear some feedback and kind of spread this around, because obviously Matt and I are just talking heads, and we have our own opinions, and we have our own theories on this whole thing. But I'd love to hear from everybody out there.
And please, this we love it whenever you share the podcast.
Yeah.
I think this is a really important one to get out there to a lot of people.
Totally
so whenever
agree.
you get a chance, get this out to as many people. If you're a real estate agent out there and you're trying to understand the market and you're really trying to stay ahead of things, absolutely get this. Absolutely share this. I think you should share this with your buyers and sellers.
Yeah.
And talk to them about this. If you've got a listing appointment that you're going on, send this ahead of time to them so that you don't get caught flat-footed not having had that conversation with that seller.
Right.
So use this as best as you can. I mean, our podcasts are kick-ass, period. Right.
Yeah.
All right.
They know that.
Right. But this one certainly is a tool for agents to use that they should really take advantage of. Right.
Take a look. I mean, it's really easy to Google and try to. You can vet your sources. I mean, I just typed in iBuyers and real estate, and you get the Wall Street Journal.
Yeah.
I mean, there are Forbes. There are tons of reputable sources to look at that, and I would really encourage the consumer to look at the reputable sites, come up with your own opinion, and then start to play off of that.
And please understand what an advertorial is. I can't overstate that.
Yeah, that's deceiving.
It is.
Yeah.
It is. Yeah, it's gonna here's the different options, and you really need to look at it. Really need to look at it this way. One of the things that was put out there is that, like I said, it was they purchase your home in a couple of days, and it's an all cash closing, so there's no headaches for the seller.
Right.
That's just not true.
Right.
I mean, that's just not the reality of it.
not.
So, and of course, at the end of it, like I said, there was a video of a guy standing in front of a whiteboard talking about how he could help, how he could help people out with that. So, be careful what you're looking at, but absolutely go out there and look at some stuff.
Be aware, and then at the same time, if you're the consumer, call your realtor and have this discussion with them, because any good realtor is going to be a consultant year round, not just.
That's right.
If you bought your house 3 years ago, you don't talk to your realtor just when you want to sell or buy something. You talk to your realtor because that's the trusted source. So it's important for realtors to understand this on a deep level, just as much as they know their own market. So.
Absolutely, completely agree. You can't act like this doesn't exist.
Right.
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 Cool. So
Rock
as
on.
always, you know it. Good stuff.
All right.
See you.